Hello guys, welcome back to the Accounting Podcast Talk. I'm Marissa, and today we are going to discuss an important topic for your entrepreneurs and startup owners: how to manage finance and taxes effectively in a growing business. Now imagine this: your business is growing rapidly, sales are increasing, customers keep coming, and revenue look promising. But suddenly, you start facing cash flow problems. The taxes begin to pile up, and your financial records become disorganized. Why does this happen? Well, many startups fail not because they have bad products, but because they fail to manage their finance properly. So today, let's talk about some practical tips that can help startup businesses improve their financial management, cash flow, and tax compliance. Let's get started. Many startup owners focus heavily on sales and marketing while ignoring the importance of financial management. In reality, with financial management, help businesses maintain liquidity, control operating expense, and improve profitability. One of the most common mistakes is mixing personal money with business money. As a result, transaction records become messy, the cash flow statement becomes unclear, and it becomes difficult to evaluate the company's actual financial performance. That's why every business should have a separate business account, proper bookkeeping, and a clear budgeting system from the very beginning. Okay, now let's talk about one of the most important concepts in business: cash flow. Many startups appear profitable on their income statement, but still run out of cash. Why? Because profit and cash are not the same thing. A company may generate high sales through accounts receivable, but if customers haven't paid yet, the business still doesn't have enough cash to operate. That's why business owners should regularly monitor cash inflows and outflows, control expenses, and prepare an emergency fund. Remember, a business can survive without profit for a short period, but it cannot survive without cash. Another important tip is understanding financial statements. At minimum, startups should prepare an income statement, a statement of financial position, and a cash flow statement. These reports help owners calculate net income, evaluate financial performance, and analyze important financial ratios, such as the current ratio and debt-to-equity ratio. Besides finance, taxes are equally important. Business owners should understand their obligations related to income tax, follow a debt tax or VAT, and annual tax reporting. It is also important to implement tax training and maintain good tax compliance to avoid penalties and legal issues in the future. Finally, every business should establish strong internal controls. Without proper control, the risk of fraud, accounting errors, and asset misuse increases significantly. Simple internal control includes separating accounting duties from assembly, reviewing transaction regularly, and maintaining organized documentation. So, what can we learn from all of this? First, don't focus only on business growth, focus on financial health as well. Second, understand that cash flow is often more important than simply appearing profitable. And three, businesses with good financial management, strong internal controls, and proper tax compliance are more likely to achieve sustainable growth. And that concludes today's episode about managing finance and taxes for startup business. Hopefully, this discussion helps you understand that business success is not only about innovation and attracting customers, but also about maintaining strong financial management and responsible tax practice. Thank you for listening to the Accounting Podcaster. I'm Yanisa, and I will see you in the next episode. And remember, a great business is built not only by innovation, but also by good financial management. Goodbye, everyone.